Florida's population grew by over 350,000 people last year. But here's the part that should terrify you. In three specific types of areas, more people are trying to leave than move in. Insurance companies are pulling out. Banks are tightening loans. Long-term residents are selling at a loss just to escape. And yet, these same neighborhoods are still being marketed as up-and-coming or hidden gems. If you're thinking about buying in Florida, you're walking into the middle of a story that's already being written, and most buyers don't realize they're joining it in the third act, right before the collapse. Look, if you're tired of real estate videos that just rehash the same sunshine and tax savings talking points without telling you the actual truth about where not to buy, do me a favor. Hit that like button right now. And if you want someone who's actually going to be straight with you about the traps, the risks, and the reality of Florida real estate without all the hype, go ahead and subscribe. Because I'm not here to sell you a dream. I'm here to make sure you don't buy a nightmare. So let's get into why this matters. You're not here because you hate Florida. You're here because you're smart enough to know that not all Florida real estate is created equal. The mainstream advice tells you to buy now before prices go up, or follow the migration trends. But that advice ignores three devastating categories of areas where buyers are getting crushed by climate risk, infrastructure collapse, and speculative bubbles. This video is going to show you how to identify these traps before you sign, how to read between the lines of what realtors won't say, and most importantly, how to protect your future self from a decision that looks like freedom but feels like a cage. This isn't about fear, it's about clarity. So let's get you to the truth. Let me tell you about Sarah. That's not her real name, but her story is absolutely real, and it's playing out in living rooms across Florida right now. 2 years ago, Sarah bought a beautiful townhome in Southwest Florida, about 20 minutes from the beach. Everything about the purchase felt right. The neighborhood was clean, safe, full of young families. The schools were good. The commute to her job was reasonable. Her monthly mortgage payment was comfortable at $1,800. And her homeowner's insurance at closing? $2,400 a year. Totally manageable. She did everything the right way. She got pre-approved. She hired an inspector. She toured the neighborhood 3 times. She asked all the questions first-time buyers are supposed to ask. Then last year happened. Her insurance renewal came, and the number on the page didn't make sense. $8,900. She called her agent thinking it was a mistake. It wasn't. Her provider had recalculated risk across the entire region after the previous hurricane season, and her premium had nearly quadrupled. She shopped around desperately, called every company she could find. Some wouldn't even quote her. Others came back higher, so she paid it. What choice did she have? Then this year, the letter came. Her insurance company was exiting the Florida market entirely. They were dropping her. She had 45 days to find new coverage, or her mortgage company would force place a policy at an even more insane rate. She spent weeks on the phone. The only company willing to cover her quoted $14,000 annually. $14,000. Her mortgage is $1,800 a month. Her insurance is now more than half of that. Think about that. She's paying almost as much to protect her home as she is to own it. And here's the part that should make your blood run cold. Sarah is not in a flood zone. She's not on the water. She doesn't even have a water view. She's just close enough to the coast that the insurance actuaries have run the math on hurricanes, storm surge projections, and the next 30 years of climate data, and they've decided she's not worth the risk. Sarah can't sell without taking a massive loss because every buyer who looks at her place runs the same insurance quotes and walks away. She can't refinance because the insurance cost destroys her debt-to-income ratio. She's trapped in a home she loved, now slowly drowning in financial quicksand that nobody warned her about during the buying process. And here's what makes this so devastating. Sarah's neighborhood still looks perfect. The lawns are manicured, kids ride bikes in the street. There are no boarded-up houses or obvious signs of distress. The danger isn't visible, it's statistical. It's actuarial. It's the quiet math that ruins lives while everything on the surface looks fine. That's the first area you need to avoid in Florida: coastal proximity without coastal privilege. And I'm going to explain exactly what that means. But before I do, let me tell you a different kind of story. Imagine you're buying a ticket to see your favorite band. The venue looks incredible online. Brand new, modern, huge capacity. You're so excited you buy tickets the day they go on sale. Premium seats. Then 6 months before the show, you start hearing rumors. The venue isn't finished. They haven't completed the parking lot. The bathrooms aren't fully functional. They haven't hired enough security staff. Technically, the show will still happen, but the experience is going to be a disaster. Overcrowded, chaotic, unsafe, and you can't get your money back because you already bought in. That's exactly what's happening right now in Florida's hyper-growth inland sprawl areas, and most buyers have no idea they're walking into it. Developers are building thousands of homes faster than counties can build the roads, schools, water treatment plants, and emergency services to support them. These master-planned communities look absolutely stunning in the renderings. Resort-style pools, clubhouses, walking trails. The homes are affordable compared to coastal areas. The lots are bigger, the taxes are lower at first. It feels like you're getting everything you wanted without the premium price tag. So you move in, you're excited. The house is new. Everything smells like fresh paint and possibility. Then you start living there. Your commute that was supposed to be 20 minutes to work is now 50 because there's one traffic light for 8,000 new residents, and the county hasn't widened the roads yet. Your kids are in overcrowded portable classrooms because the school district underestimated growth by 3,000 students. Your water pressure drops every summer when everyone's watering their lawns because the treatment plant was designed for half the current population. The nearest grocery store is 30 minutes away. The promised shopping center that was supposed to break ground last year is still just a dirt lot because the developer is waiting for more homes to sell before they invest in retail. And your home value? It stalls because everyone who's thinking about buying after you does their homework drives through during rush hour, talks to the neighbors, and realizes the infrastructure can't support the population. They realize they're not buying into a thriving community. They're buying into a construction site that might take another decade to become livable if it ever does. You didn't buy a home. You bought a placeholder in a community that doesn't exist yet and may never fully materialize the way it was sold to you. So if coastal areas are insurance traps and inland sprawl is an infrastructure gamble, where's the third danger hiding? It's in the places that look like the smartest investment on paper. The places everyone's talking about. The landlocked properties in oversaturated markets that are being bought up as rentals, as Airbnbs, as investment properties by people who don't plan to live there. Now let me break down exactly what these 3 forbidden zones really mean and why they're so dangerous. The first zone is what I call coastal proximity without coastal privilege. This is the cruelest trap in Florida real estate because you're buying close enough to the coast that you inherit all the climate risk, the insurance nightmares, the storm exposure, the long-term vulnerability. But you're far enough away that you don't get any of the benefits that make waterfront properties hold their value. You don't get the view, you don't get the lifestyle, you don't get the resale demand that comes with being directly on the water. Insurance companies don't care about your view or your vibe. They care about elevation maps, storm surge models, wind speed projections, and historical hurricane data. If you're within 10 miles of the coast but not directly on the water, you're in this danger zone where you pay coastal prices and coastal insurance rates, but your property doesn't appreciate like true waterfront real estate does. The math just doesn't work. The insurance costs will eat you alive month after month, year after year. And when the next big hurricane hits, not if, but when, your neighborhood gets the damage, the flooding, the power outages, the chaos, but you don't get the media attention or the rapid rebuild investment that waterfronts receive. Waterfront communities bounce back because they're valuable, they're desirable. People with money want to be there. But coastal adjacent neighborhoods, they're in this weird limbo where they're close enough to suffer but not valuable enough to prioritize. And here's what's really happening behind the scenes that nobody talks about. Insurance companies have teams of data scientists running probabilistic models 24/7. They're not guessing. They're calculating down to the individual property what the likelihood is of a catastrophic loss over the next 10, 20, 30 years. And what those models are showing them is that climate change isn't some distant future problem. It's a present reality that's fundamentally changing the risk profile of coastal Florida. Sea levels are rising, storm intensity is increasing, the frequency of major hurricanes is up, and insurance companies are responding by either raising rates to levels that make properties unaffordable or by leaving the market entirely. When Sarah's insurance company pulled out of Florida, they didn't do it because of one bad year. They did it because their models told them that the next decade in coastal Florida is going to be financially unsustainable for them. They'd rather lose the business than lose billions in claims. And when insurance companies are running away from an area, that should tell you something profound about the long-term viability of owning property there. The second forbidden zone is speculative sprawl with phantom infrastructure. These are the massive master-planned communities popping up like mushrooms after rain in central and north-central Florida. Places like parts of Ocala, Spring Hill, areas outside of Lakeland and Sebring. These developments promise resort-style amenities, A-rated schools that don't exist yet, and small-town charm just an hour from major cities. The homes are cheap compared to the coasts. I mean, genuinely affordable. The developments look absolutely incredible in the marketing materials. Young families are flooding in from expensive states, thinking they've found paradise at a discount. But here's the brutal reality that becomes obvious 6 months after you move in. These communities are being built faster than the infrastructure that makes them livable. Developers are selling you a lifestyle that won't exist for another decade, if it ever fully materializes. They're essentially asking you to make a $250,000 bet that the county will catch up, that the roads will get built, that the schools will get funded, that the hospitals and fire stations and grocery stores will follow the population. Sometimes that bet pays off, but often it doesn't. And when infrastructure can't keep pace with growth, you're stuck in a suburban island where your home value stagnates because nobody wants to move somewhere that takes 90 minutes round trip just to get to Target and back. The problem is structural. Counties in Florida make money from building permits and impact fees, so they have every incentive to approve new developments. But actually building the infrastructure to support those developments, that takes years of planning, bonding, tax increases, and political will. And it almost always lags behind the construction. So you end up with these neighborhoods that have beautiful homes and no soul, no community infrastructure, no gathering places, no local economy, just houses and more houses and the constant sound of construction. And here's something most people don't realize until it's too late. When you buy in these speculative sprawl areas, you're not just betting on your house. You're betting on every house around you. You're betting that your neighbors will stay, that they won't default, that the developer won't go bankrupt before finishing the amenities they promised, that the HOA will be properly funded and managed. You're tying your financial future to 1,000 variables you can't control. And in markets where growth is happening too fast, those variables start failing. HOAs run out of money. Developers walk away from promised phases. The people who bought early start trying to leave, and suddenly you're in a neighborhood where for sale signs are as common as mailboxes. The third forbidden zone is landlocked investment properties in oversaturated markets. This is happening in Jacksonville, parts of Tampa, Orlando suburbs, even some neighborhoods in Fort Myers. These are the condos and single-family homes in markets where everyone had the same bright idea at the same time. Buy it as a rental property, Airbnb it, or just hold it for appreciation while renting it out to cover the mortgage. The problem is that when everyone's an investor, nobody's building a community. These areas have sky-high vacancy rates. They have brutal short-term rental regulations that change every year, sometimes multiple times a year, as cities try to balance tourism revenue with neighborhood stability. The homeowner associations are either completely broke because absentee owners don't pay their dues, or they're tyrannical because the few people who actually live there are furious about the chaos. Appreciation is flat or negative because supply outpaced demand. Every month, hundreds more investment properties hit the market. Rental income is completely unpredictable because you're competing with 1,000 other landlords in the same zip code, all trying to rent to the same limited pool of qualified tenants. And when the market shifts, when interest rates go up, when the economy slows, when the next recession hits, these properties become the first to lose value because there's no foundational demand holding them up. There are no families who desperately need to live there. There are no local employers anchoring the population. It's just speculation on top of speculation on top of speculation. You're not investing. You're gambling in a rigged casino where the house always wins and the house is the developer who already sold and left. Now here's the paradox that nobody talks about, and this is important. People move to Florida for freedom. No state income tax. Lower cost of living than the Northeast or California. Sunshine, space, the ability to live life on your terms. But the three areas I just described, they're freedom traps. They look like liberation on the surface, but they become prisons once you're inside them. You save on income tax, but you lose it all to insurance premiums that double every year. You save on housing costs up front, but you lose it to gas, time stuck in traffic, car maintenance, and the mental tax of living somewhere that doesn't function properly. You gain square footage and yard space, but you lose community, stability, walkability, and long-term property value. Real freedom in Florida isn't about finding the lowest purchase price or the biggest house for your money. It's about total cost of ownership. It's about quality of life that doesn't require you to spend 3 hours a day in your car. It's about having the ability to leave when you want to, not when you're financially forced to because you're trapped underwater on a property nobody wants to buy. The areas that look like the best deal, that feel like you're finally winning, that make you excited to tell your friends back home how much house you got for the money. Those are often the areas that will quietly destroy your financial peace over the next 5 years. So how do you actually protect yourself when everyone around you, your realtor, your mortgage broker, your friends who already moved to Florida, is telling you to just buy now before prices go up even more? How do you read the signals that the market is sending when everyone has a vested interest in you not seeing them? First, you need to learn to read insurance availability like it's a crystal ball, because it is. Insurance companies are profit-driven and data-obsessed. They have more information about risk than anyone else, and they're not emotional. If you're looking at properties and you can't get quotes from at least 3 major carriers without being pushed toward Citizens Property Insurance, that's Florida's state-run insurer of last resort. That's not just a yellow flag, that's a screaming siren telling you to walk away. Citizens isn't a choice. It's what happens when the free market has already decided your property is too risky to insure profitably. And Citizens rates are high and getting higher, plus they have the right to assess you additional charges if they have a catastrophic loss year. You're basically signing up to be the insurer's piggy bank with no way out. Before you even start touring homes, before you fall in love with a kitchen or a backyard, call an independent insurance agent. Not one referred by your realtor, an independent one who doesn't have a dog in the fight. Give them the zip codes you're considering and ask for quotes. If they hesitate, if they start talking about market conditions, or if they immediately mention Citizens, you have your answer. Let insurance be your truth teller, because it will tell you what everyone else is trying to hide. Second, look at days on market, and I mean really look. If homes in the neighborhood you're considering are sitting for 90 days or more, that's not a buyer's market. That's a warning sign that something is fundamentally wrong. In a healthy market with genuine demand, homes move within 30 to 60 days max. When they sit longer, it means buyers are doing their homework and walking away. It means the people who understand the local market, the insurance situation, the infrastructure problems, the HOA drama, are saying no. Don't assume you're smarter than all those other buyers who passed. Assume they saw something you haven't seen yet and go figure out what it is. Third, pay attention to new construction saturation. If more than 30% of the homes in a zip code were built in the last 5 years, infrastructure is almost certainly lagging. Counties and cities simply cannot build roads, schools, water systems, and emergency services as fast as developers can build houses. It's physically and financially impossible. So when you see massive new development, what you're really seeing is a mismatch between housing supply and community infrastructure, and you're being asked to move in during that gap and hope it closes. Sometimes it does, often it doesn't. And even when it eventually does, you've spent years living in construction chaos with degraded quality of life. Fourth, and this is something almost nobody thinks to do, check local government debt and county budgets. This information is public. You can find it online. Look at whether the county is borrowing heavily to fund basic services. Look at whether they're deferring maintenance on roads and bridges. Look at whether they're running deficits. Because if local government is already struggling financially, that cost is going to hit you eventually through higher property taxes, impact fees, or cuts to services you thought you were getting. The county's financial health is your financial health when you own property there. And fifth, join hyper-local community groups before you buy. Facebook neighborhood groups, Nextdoor, local Reddit threads. These are where residents tell the truth about traffic nightmares, HOA corruption, water quality issues, developer failures, and everything else that makes or breaks daily life. Spend a week just reading and absorbing. The complaints you see repeated over and over, those aren't isolated incidents. Those are the realities you'll be inheriting. If people are constantly posting about insurance cancellations, terrible traffic, or fighting with the HOA, that's your future if you buy there. Now let me give you the practical framework for making a decision. Before you fall in love with any property, before you let yourself imagine your furniture in the living room, or your kids playing in the backyard, run the total cost model. Take your mortgage payment and add your insurance premium. Add your HOA fee if there is one, add your property taxes, add estimated annual maintenance, and then add your commute costs. Not just gas, but the value of your time. If you're spending 2 hours a day in the car, that's 10 hours a week, 40 hours a month. That's a part-time job you're not getting paid for. Factor that in, and then add a 20% buffer on top of everything for Florida's volatility. For the special assessments, the hurricane deductibles, the AC repairs, the insurance spike you didn't see coming. If that total number makes you uncomfortable, if it stretches your budget thin, the house is too expensive even if you're pre-approved for the mortgage. Because the mortgage is just the beginning of what you'll actually pay, then do what I call the 5-year exit test. Close your eyes and imagine it's 5 years from now. You need to sell, maybe for a job, maybe for family, maybe just because you want to. Ask yourself honestly, would someone want to buy this house? Not would it have appreciated, but would it sell without sitting on the market for months? Would a buyer look at the insurance costs, the commute, the neighborhood trajectory, and say yes? If the area you're considering depends on continued hype, on perfect weather, on sustained low interest rates, on the hope that infrastructure will eventually catch up, it's fragile. It's not a solid investment. Look instead for neighborhoods that have bones, established schools that are already there, not promised, employers within 15 minutes, grocery stores within 10 minutes, multiple insurance carriers willing to compete for business. These are signs of stability. And finally, talk to people who've been there for 5 years or more, not the recent arrivals who are still in the honeymoon phase. Find the people who've lived through a few hurricane seasons, who've seen insurance renewal cycles, who've watched the neighborhood change. Ask them what they wish they'd known before they bought. Ask them what's gotten better and what's gotten worse. Ask them if they'd buy the same house again knowing what they know now. Their answers will tell you everything. So let me bring this all together because this matters. Florida is not a scam. Moving to Florida is not a mistake. There are incredible places to live in this state. Places with strong communities, reasonable insurance, solid infrastructure, and genuine long-term value. But there are also parts of Florida where the dream is being sold so much faster than the reality can possibly support it. Where coastal adjacent areas will bleed you dry with insurance costs that double and triple while your home value stagnates or drops. Where sprawling inland developments are building houses faster than counties can build the roads and schools to support them, leaving you stuck in beautiful new construction with no community infrastructure. And where oversaturated investment markets are stacking speculation on top of speculation until the whole thing collapses, and the people holding properties are the ones left with the losses. The people who thrive in Florida, the ones who build wealth and stability and genuine quality of life here, aren't the ones who buy the cheapest property or move the fastest. They're the ones who ask hard questions that make realtors uncomfortable. They're the ones who read the signals that everyone else is ignoring. The insurance withdrawals, the days on market, the infrastructure gaps, the government debt. They're the ones who prioritize long-term stability over short-term excitement. They understand that freedom isn't about escaping state income tax or buying a bigger house than you could afford back home. Real freedom is about building a life that doesn't trap you, that gives you options, that lets you sleep at night without worrying about the next insurance renewal or the next hurricane season. If you're thinking about moving to Florida, I am not telling you not to do it. I'm telling you to be smarter than the system that profits from your excitement and your dreams. Do the insurance check first before you tour a single house. Calculate the real total cost, not just the mortgage. Look for neighborhoods that have bones, actual infrastructure, actual community, actual stability, not just renderings and promises. And if something feels too good to be true, if the price seems impossibly low compared to everywhere else, if everyone's telling you it's the opportunity of a lifetime, trust that feeling in your gut that says, wait. Because in real estate, the truth always catches up. It might take 2 years or 5 years or 10 years, but it always catches up. And the difference between people who build wealth and people who lose everything is often just taking the time to see what's really there before they sign on the dotted line. You deserve a home that supports your life, not one that quietly dismantles it month by month. You deserve a community that functions, not one that promises to function eventually, maybe someday. You deserve to make a decision you won't regret, and that means having information that most buyers never get, because nobody with a commission on the line wants to give it to you. If this video helped you see Florida real estate differently, if it gave you clarity or potentially saved you from a costly mistake you were about to make, do me a favor and hit that like button. It actually matters because it helps this information reach more people who need it. Drop a comment down below telling me which area you're researching or what questions you still have about buying in Florida. I read every comment and I'll do my best to point you in the right direction. And if you want more honest, no BS breakdowns of real estate, money, and life decisions that actually matter, the stuff that financial content usually glosses over or ignores completely, go ahead and subscribe. Because I'm not here to sell you a course or a dream or a get-rich-quick scheme. I'm here to give you the truth so you can make better decisions than most people do. Thank you for watching. Thank you for taking your financial future seriously enough to spend 10 minutes getting information that could save you hundreds of thousands of dollars and years of regret. Good luck out there. Do your homework, trust your gut, and don't let anyone rush you into the biggest financial decision of your life. You've got this.